After the company issued a lackluster outlook ahead of its earnings next week, turning in its worst session since June of last year. Tomorrow, we get results from Delta. Let's bring in Cowen Managing Director Helane Becker, who covers both companies. Helane, it's been a good run for a lot of the travel industry. Is this signaling an end to it, or is this just something that American itself has to figure out?
Hi, John. Thanks very much. Good to see you. I think it's a combination of both, actually. I think American hadn't updated guidance during the quarter, and in the end, it was actually a couple of cents better than what we were expecting. But I've noticed over the last 2 or 3 weeks, revenue estimates from my peer group had gotten significantly higher. And so there was a fair amount of disappointment. And then to your second point, there is concern that the consumer is tiring. And while we think we're going to have a really strong second and third quarter, especially in international travel and record revenues, I think costs are up, so we're not 100% certain we're going to have record earnings. And we are definitely worried about the fourth quarter.
So we just got the CPI report today, and travel was really expensive, right, in CPI. So is this, in a way, just a reflection of the airline labor costs being stubbornly high and in fuel costs, even though they're easing, perhaps for many of us in general, not enough for airlines?
Yes. So what you say is 100% accurate. In order to attract and retain, airlines are having to raise salaries across the board. And that's not just true for the union groups like pilots and flight attendants and so on. They're also having to raise rates in corporate to attract people. So some of those people who are getting laid off in tech are finding jobs in other industries, but maybe not at the wage rates that they had received prior. Then to your second point, fuel costs are very volatile and are up a lot. And then you have high maintenance costs because of delivery delays. And the other thing that we've been talking about, but it's starting to get some meaningful notice by others, is the lack of air traffic controllers in the New York area. And this does not bode well for the summer at all if you're traveling from the New York area airports, because the government asked the airlines who serve the market, American, Delta, United, and JetBlue, to cut capacity by 10%. Well, demand is up about 20% over where we were in 2019, and capacity is down even before this 10%. So you have this huge mismatch between seats available and seats wanted.
Okay.
And that means only one thing. Fares are going up, and that's what you're seeing. In the CPI, you saw, I think, year-over-year increase, but maybe a sequential deceleration.
Okay.
But in general, I think that's why we're forecasting really strong revenue growth for the summer.
So, Helane, very quickly, very quickly, all of the airlines got hit so hard today. We have Delta earnings tomorrow morning. Is there a name you buy right now as we come into earnings season?
Well, yes. So our top 3 picks are United, Delta, and Copa, which is the Panamanian-based airline. And so, yes, those are the 3 names I would buy for their strong international exposure. Remember, Morgan, really quickly, last year, the government did not eliminate testing to come back into the U.S. until June. So you had very strong domestic, but you didn't have strong international because everybody had already made their summer plans by the time the Biden administration removed those restrictions. So we think there's really strong international demand, and we think Delta and United will specifically talk about that this week and next.